let's get back to the big elephant today. The Monetary Policy Committee of the Nigeria Central Bank today decided to leave all parameters unchanged. The central bank governor spoke about that. Let's take a quick listen to the central bank governor. Then we'll take some of the comments from Comercio partners. Take a listen.
The committee therefore decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows. 1. Retain MPR at 11.5%. 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the corridor. And retain the CRR at 27.5%. 4. Retain liquidity ratio at 30%. The only exchange rate that I recognize today in the Nigerian foreign exchange market, which is a dominant market, remains the investors and exporters window, which is a market that we expect everybody that wishes to procure foreign exchange, somebody who wants to sell foreign exchange, go to your bank, the investors and exporters window will attend to you. I'm sorry to say that I do not, and I do not intend to recognize that there are any other rates in the market. And I will give you explanation. 8 weeks ago, yes, you are very correct, we did stop the allocation of foreign exchange to the BDCs. Indeed, we began to ask ourselves, why did you wait for so long that we continued to do this? The reason is because Nigeria remains the only country on earth. The Central Bank of Nigeria remains the only central bank in the world, as at 8 weeks ago, that would dip its hands into its reserves, our commonwealth, and you pack dollars and begin to sell it to borrow exchange operators in the market, all in an attempt to stabilize foreign exchange rate in the market.
Joining me now for some chat into today's development is Tosin Oshukoya, a co-managing partner at Comercio Partners. Good Friday to you and welcome to the show, Tosin.
Thank you, Boston.
Was the latest Monetary Policy Committee interest rate decision in line with your expectations and general consensus of the market?
Yes, it was. It did not come as a surprise to the entire market. The market expected that all the rates were going to be held steady. So it did not come as a surprise at all. You would agree with me that we've seen moderation in inflation and we've seen some growth in the GDP. Considering all of these, we expected that, yes, the announcement would be around holding steady the rates. So it did not come as a surprise at all. However, I must mention that the market was expecting some sort of measures in the FX space. You would agree with me that we've seen massive divergence from, the official window and the parallel window. The difference between the official and the parallel window, it's almost about 40%. That calls for a major concern. So market was expecting that the central bank was going to address it. But unfortunately, we did not see any meaningful measures that could stem this tide.
Okay, so this is the fifth meeting since the year started, and the central bank is holding rates unchanged because of the outlook on the economy. Broadly speaking, what do you think are the underlying considerations on both and the local front on this rate decision for you folks at Comercio Partners, aside the FX?
I think for us at Comercio Partners, we will continue to look at what happens in the next few months before the year runs out. It is important to see figures coming out of inflation. Inflation has been moderating, but it is very fragile. We are hoping that what has happened in the FX market would not heighten or reverse, the moderation we're seeing in the inflation rate. And also the fact that, yes, the second quarter printed significantly rise in GDP, but we hope that the third quarter that could continue. There are so many figures that have been touted that before the year runs out, we could see the growth in GDP moderating or coming out between 3 and 4%. That becomes a major consideration for us. At the global scene, what we think would happen, obviously what has happened with labor data coming out of the US becomes a major bane in what would happen in emerging market or frontier market like Nigeria. If the US market comes, or the Fed comes out with tapering before the end of the year, you might experience some capital flow. So for us, that is also very important. What the next labor data brings out would make or mar a major change in the emerging market.
Okay, so let's return to the FX, because the question now is how should the market and investors trade the latest official rate position? The central bank has shut the window permanently, as it were, on returning FX sales of the country's Commonwealth to the Bureau de Change, and then still chasing, from all indications right now, every bad behavior that it could detect in the market, home and abroad, as it were. So it looks like on two fronts, the central bank is looking to curb a lot of activities in the FX market, which is considered unwholesome.
I think the mechanism and the measures the central banks are taking right now, in all honesty, it's commendable. I think it's long overdue. What they've done by suspending sale to the BDC and moving it to the banks is to move the distribution channels away from the BDC to the banks. But the challenge with that is how effective is that? I mean, I might be wrong, and we might be wrong at Commercial Partners. We don't think that the banks have the same reach as much as the BDC in penetrating to the market and having a wider coverage. But Boasin, that's not the challenge. The challenge actually that we're facing is liquidity problem. So what has happened is the liquidity of FX into this market or into this country has been stifled. And foreign investors are not particularly moving their funds into the country. If you look at numbers coming out of FDIs and FPIs, they've waned significantly.
Yes.
I mean, FDIs, for instance, I mean, we just have 10% of what we experienced in 2020. In 2020, we had about 2 billion, which honestly wasn't so significant compared to what we've experienced in the past. But this year to date, we've only had about $200 million from FDIs. And if you look at the FPIs, it's the same fate as well that we're experiencing. So if you look at the supply channel coming into this country, it's been limited to one entity, yes, and that's the central bank.
Yes. So if we look ahead to the November final policy meeting, what's your take, very quickly?
I think for me, I will be looking at the third and the fourth quarter, maybe the third quarter numbers in terms of growth in GDP and further moderation in inflation. That would determine what would happen before the end of the year.
How soon do you think the central bank will have to tinker up or down with all the with interest rate parameters, at least perhaps the headline rate?
I think the major thing is how far off the parallel market is going to run away from the official market. If that continues to, if the market continues to experience a lot of pressure, right now we're talking about 40% divergence from the official window, that might cause for a big concern, and central bank might need to weigh in or step in to steer that tide. And when that happens, we don't know the kind of measures, because they have a litany of measures they can put in place, to steer that tide.
The bottom line is that we're not earning enough.
The bottom line, Boasin, is we have fundamental structural problem in this country. We rely largely on one supply chain, which is crude oil. We are in the process of developing the non-oil sector. Until we begin to see the rewards and the returns from that sector, we will still continue to be in this situation. Don't forget that our import duties are still going up significantly. Yeah. Our trade balance is widening, so that becomes a problem on this country, and it will continue to put pressure on Naira.
Fasten your seatbelts, everyone. The war on FX is not over yet. Enjoy your weekend. Tosin Oshukoya, co-managing partner at Comercio Partners.
Thank you,
boss. Appreciate it.